Hi everyone, hope you're doing well. Welcome into today's video. Yesterday I didn't do a video just because I did a video on B&M, and then later at night I did the Hims and Hers video, and they were two long videos. It took a long time to put together, and I thought, you know what, I don't need to do a video today because you've got them two videos to watch, and I think I'm going to have a little bit of a break today. So yeah, no video yesterday, but I thought I'll do one today. Tomorrow I should do the stocks I'm buying for either the US stocks or the UK stocks. I've not decided which one I'm going to do yet, but I'll do one of them for you guys. But today I wanted to do a bit of a reflection because the day before was a reality check, I think, for the stock market. I think that we've got into, 2022, a lot of you guys went through it, awful market, stock market just continued to go down in it. Obviously some of you guys are still, aware of that and, know that market's going to come back one day. We don't know when that's going to happen, but it is going to come back one day. But there's a lot of investors that kind of started maybe in 2022 at the bottom of the market and then into 2023 and 2024. And then a lot of those guys, I think, have only used to a stock market that went up and up and up and up. And certainly, like Hims and Hers is an attractive retail stock, I would say. A lot of people that have got into the stock market have started to get into the likes of Hims and Hers. And what I saw the other day when we did see the drop in Hims and Hers and the stock fell down 42% is I saw the pure panic again in the stock market. Like just a week of a negative stock like that, and the panic that was caused during that time frame. I was seeing people that were, panic selling, looking at the stock and going, what do I do now? People that couldn't value the stock, like that was scary for me, looking at people that weren't able to value it and then decide if it was a good stock. There was just so much fear out there that it took me by surprise, because I didn't think we would see that happen. Because yeah, the stock's down 42%, pretty brutal, to be fair. It is a bit of a brutal drop, but it's only a week, guys. Like some of these guys that have been through the 2022 stock market crash, a lot of you guys are seasoned for this. You went through a stock market where it was down for like a year and a half. A week for you guys is nothing really, but there was a lot. I really saw the panic out there, and today I just wanted to educate like a few people around that sort of situation, because I feel like there was a lot of people that might have panic sold during the situation. Because when we go back to early this month, like the 19th of February, the 18th of February, there was people out there that were buying Hims and Hers at $58. There was someone, the 52k on this stock is $72. There is someone that bought Hims and Hers at $72 only a week ago. But do you know what happened? There were people selling it at them sort of levels, and all the way down to $39. And people that were willing to buy the stock at $72, $68, $64, people queuing up to buy the stock at them sort of levels. But as soon as the stock went all the way down to $39, there's no queue to go buy the stock. There wasn't enough buyers when the stock fell to, $55, $50, $44, $40. There was not enough buyers at them sort of levels for the stock to go up. And it's crazy, isn't it, with the stock market? People are willing to pay that high, but as soon as it dropped like that, oh, I don't want that stock. And that's actually when the best time is to go buy it. That's when sometimes you get the stock thrown under the bus and you get it to good valuations. And now obviously if you bought it, you got the rewards, because the stock is starting to rally up after that dip. I told you guys, I thought the dip was an absolutely ridiculous dip that shouldn't have gone that low, and a few people are finally starting to buy in now. I bought in there as well. But it also showed me that no matter what has happened previously, people will panic. Even though the stock, so year to date, Hims and Hers is up 76% year to date, right? But even though it's up 76% today, I saw people panicking because the stock was down. Like I got one of these comments. There were so many comments I could have pulled up for this video, but I just wanted to kind of give you a few and just show you like the mentality around sometimes just that little bit of fear. So there was a comment here from please enter name, and it said, and this is why you buy index trackers. All good until the market decides to give the cage a shake. And I thought, what? I said, that was on a video about Hims and Hers, and obviously referring to like, oh, this is why you should buy indexes, because Hims and Hers is down 42%. I thought, hold on here. This stock is still up 76% year to date. If we go have a look at the S&P 500, the S&P is up 1% year to date. Hims and Hers is 70x the S&P 500. But you should go buy this because sometimes the cage gets a little bit of a shake. Well, when you go up them sort of levels, there's always going to be a little bit of a cage gets shaken because it went a little bit crazy. But then it went back to okay valuations, in my opinion. And now just because the stock dropped that much, it's still up 76%. Sometimes some people need to zoom out. Sometimes people just look at what's happened in the last week and don't take the step back. You know, the stock market sometimes reminds me of like a footballer, and a footballer always gets judged off the last game. They have a bad last game and everybody goes, oh, they're a trash player, they're absolutely rubbish. And then they'll go score a hat-trick and then everybody goes, you know what, he's the best player in the world. Like, you're only as good as your last game. And it's a bit similar like the stock market. It's like, you're only as good as what happened in the last week. Like, you can have a football player that for the last 5 seasons is a top goal scorer in the league. Has one season where they finish 3rd, 4th, top goal scorer. Everyone goes, oh, this guy's finished. Next season, comes back. It's like, well, there was a little bit of a blip, but consistently, absolutely amazing. And people are so easily, so ready to throw things under the bus. And I thought, it just shows you, this stock has been an absolute mega performer. Last year up 230%, but just because it has a dip, should be buying index funds. Well, you weren't saying that when the stock was up 70x. Well, it still is today. It's still up 70x more than the S&P 500. It makes me laugh that people are so quick to put things down just because there's a little bit of a blip. It reminded me when I went through the 2022 stock market crash and I had a few stocks that didn't work out. I remember like as soon as that happened, there was just so much like negativity in like the comment section and like, oh, this pick's rubbish, this pick's rubbish, this pick's rubbish. You're rubbish at picking stocks. And I went, hold on, so I'm rubbish at picking stocks now because I've just gone through the worst stock market that we've had since the 2008 recession. And now I'm a bad stock picker because it was the worst year and I had some stocks that didn't work out like what was expected. Everyone threw on the bus like the years of 2017, 18, 19, 20, 21. And then as soon as we get into, at least a bit of a better market, look at the returns in 2023, 2024 and so far in 2025. It impresses me how many people are supposed to be long-term investors. And then as soon as there's a little bit of blood, wow, panic stations are out there. And like this, still massively overvalued. And there was a comment here saying, how is it overvalued? And I agree, like, it just shows me like people are so willing to throw, and that with the Hims and Hers, like the amount of people that came out of the woodwork on like X and were trying to throw rubbish at it, like, it's a trash stock, And it's like, well, where have you been for like the last 2 years when the stock's going up? Like, as soon as something negative happens, everyone's willing to push, a stock under the bus. I was thinking, like, these people that can't value stocks before, like, I was looking at Hims and Hers, and I told you guys, like, they had the metrics wrong, and they're starting to finally get the metrics a little bit updated on the likes of Yahoo Finance. And if you look here, right, the forward P is down at 70 now. Now, I'm not saying it's, like, crazy undervalued, but there's a point where, and growth stocks are a little bit harder to value, and this is why growth stocks are the harder ones to invest in. But at 74 times earnings, and I think it's actually a little bit lower than what Yahoo Finance are working it out as, but just want to show you here. So analysts are finally starting to catch up the data. It's funny, isn't it, that Hims and Hers went down as much as it did, but yet in the last 7 days, analysts have been upgrading the EPS estimates and the revenue estimates by loads to try and catch up to the actual numbers they're supposed to do. So it's funny. So all the financials are going up in the right direction, and analysts are having to do catch up. If the share price went down, that's a disconnect right there. But like at the moment, analysts are expecting 57% revenue growth. Realistically, I would expect Hims and Hers to come somewhere in the higher range of the guidance that they've given, like the 63%. So let's just call it 60, right? So for a 60% revenue growth company, with the EPS supposed to go up at a decent rate as well, probably higher than that. So for the EPS supposed to go up that much, what do you value one of the hottest growth stocks in the market? Right? Because very quickly, if you're growing at these sort of levels and the revenue growth is growing at these sort of levels, do you know how fast you grow into that valuation? This is a big thing that a lot of people get wrong, is they don't realize how fast, if you grow at 60% a year and the profit's scaling up massively, you grow into that valuation so quickly. You can't be buying, you're not going to get a company like Hims and Hers at 28 times earnings, because normally you'd go buy a company that is growing like, 4 or 5% a year at 20 times earnings. If you're growing at this sort of rate, and you're trading at 20 times earnings, within a year, you're at 10 times earnings, right? and then all of a sudden you're like, well, hold on, a year's time I'm megally undervalued. So there's some growth, the valuation reflects from the growth there, because it's going to be valued more because it's growing so fast. You just got to work out what it is, and I would argue the case. I don't know how you look at the valuation that it's at now with these numbers that they're doing, and then all of a sudden you go, it's overvalued. It's definitely not overvalued in my opinion. Could argue the case at fair value, but I don't know where you get the undervalued from. Yeah, which is just absolutely nuts. And then, a comment here saying that the company has decided to phase out its weight loss products. It seems like it will have had a adverse effect on the share price. And I put this on the Discord the other day, and I said, I'm actually starting to realise that maybe people aren't reading their earnings report, and that's why the stock's gone down. Like, I looked at the earnings report and I couldn't work out why the stock went down. And the more I look at it, is that I realise that people are not willing to do the work into a stock, and that's why they're getting caught out. And that's why, a few people may be panicking, selling their stock, maybe not realising what a good opportunity is. Maybe that's why, a lot of people don't beat the market, is because they're not willing to put the work in. If you've listened to the Hims and Hers earnings call, look at the investor relations, you would have seen that is just not true. And I think that's maybe one of the reasons why the stock had dropped so much, is that because people don't do the research that they should do. If you are going to invest into individual businesses, all you had to do is read the earnings report, and then you had to look at it and you go, okay, they can't sell compounded GLP-1s anymore, okay? But at the same time, what they're going to be able to do is they're still going to do prescription GLP-1s. So they're still going to be able to sell GLP-1s. They just got to say this time, have you got side effects? Are you getting headaches? Well, let's help you with that, and then we can do, maybe help you with your dosage, or we add some ingredients in, and they can still sell it. And if people are going to get it so much cheaper, then, they're obviously going to say, maybe this side effect here, and they can get it a little bit cheaper. Obviously, they've still got their own products. They've got their own oral products as well. And then also, they've got the one that's coming off the patents as well, which is, begins with an L, forgot its name now. So, when you look at the weight loss product of Hims and Hers, they've still got 3 products, and it's still forecast to make a mega amounts of revenue in 2025 without GLP-1. And this is just basic research, and this is what people do, is that people panic and maybe just read headlines and read the fear out there and actually not do research. And this is why, when you buy, if you know the stock in and out, which for me, I know Hims and Hers in and out, I know how the company works, and I can look at this. I can look at this here when people post this, and I can look at things when maybe people, post, negative things about Hims and Hers, because maybe they're shorting it off for some other reason, and then they see the share price go down, and they read this negative article and go, oh, that's what it is. It's because they can't do weight loss anymore. But because they haven't done the research, they don't have the confidence to go through and hold it or even buy on the dip. The reason why I was so confident to go buy the dip the other day before it, started bouncing up, is because I knew the company. I knew the financials were good. I knew that some of these fake headlines that were getting put out here, especially those like ones on the gross margins, I knew it was all a load of rubbish because I've done the research. And that's the thing sometimes, is you got to have the confidence to buy. You got to own the stocks that when they dip, you know the ins and outs, and you know what's going on. You know that financially they're doing okay. You know what sometimes some of the people put out there is a load of rubbish, and that they're actually going to be okay. And also running your own numbers. Like I told you guys the other day, I was like, all these websites out here, I don't know why they're doing it, but they're giving you the wrong numbers, guys. This is why you got to, be able to ideally run some numbers yourself, because then when you run the numbers yourself, you can go, well, the market's massively undervalued it. And, as we saw yesterday, the day before, I told you guys that they're doing the wrong numbers here. So, yeah. Obviously, very quickly, I think the last kind of couple of days has kind of shown how quickly the greed can split or change into the fear. We just had a couple of bad days, and look how quick, some things can kind of drop. The likes of Tesla, a couple of, weak European sales out there. Palantir just having a bit of a pullback. It just shows you guys, like I've said for like the last couple of times, you just got to be prepared, because, and Hims and Hers is another example where, all your stocks do very well, and then you just get that slight bit of negativity, and look how quick the market can flick. And that's only like a couple of days or a week. Imagine if we have a 2022 again, where you have them sort of drops for a 6-month period. You've always got to be in a position where you're able to capitalize on it. So if you're ever in that position where you go, oh, okay, I've just bought the dip, but now I've got no cash remaining. Well, what happens if this, 40% drop from Hims and Hers goes into a 50% drop, 60% drop? You always want to be kind of in those kind of positions to be able to do okay from it. And I feel like at the moment that people are kind of in a position where if that was to happen, I don't think they'd actually do quite well. And, you look at what's kind of, building on in the background at the moment, there's that kind of doubt building in the US markets. There was some weak jobless claims data that kind of came out. Obviously, Trump with his tariffs at the moment, is that going to potentially start spiking up inflation? When Donald Trump came in, you'd think he would be, very positive for the economy in the US, but it seems like he's very focused on a lot of these tariffs at the moment, and he needs to be a little bit careful, because if he keeps doing this, it could cause himself some more problems in the longer run here. And we've already seen, what that does to the market. Couple of percent pullback. You start adding in it, you times this by 3, 4. The opportunities come very quickly in the market, and you need to be very careful at the moment, because the big thing that you'd want to be doing in the US right now is, there's kind of interest rate cuts, and maybe the jobless claims can maybe push for those lower interest rates at the moment. But if this keeps going on at the moment, it's certainly not going to be good for the economy. It's certainly not going to be good for the inflation data, and it certainly then wouldn't help the case for interest rate cuts. And that could potentially be where this kind of spike comes from, where we head a little bit lower in the market, because we have been on such a run at the moment. Obviously, as well, one thing as well that you've add in here is that the market is at rich valuations at the moment, so it would be easy for it to have a drop. If we were talking about all this going on while the market was at a lower than average valuation, then you'd argue the case that maybe it will be okay. But obviously something that you got to keep in your mind there. So yeah, I just wanted to make the video today because I remember just making that video on Hims and Hers, and then just seeing the reaction and the reaction to Hims and Hers earnings on X, and I just saw like the fear and how quickly fear can take hold, and people start making bad judgments on stocks. And like I said, just the reality there, just the reality that, only a few days ago, people were willing to pay, $68, $72 for Hims and Hers. And then within a 2-day period, the stock falls 40% and nobody wants to own it. When the stock keeps going up, people are queuing in to go buy it. And then the stock falls in 40, 50%, and you're getting the stock from where it was 2 days ago, nearly half the price, half the valuation, and yet there's no buyers that want to come in. When the stock fell to, it has had a bit of a rebound today, but the stock was sitting at $42, $40, $39. Nobody wanted to come in for it, and that's what happens. That's the stock market, guys. When things are like looking good and people are FOMO, missing out, everybody wants to own it, but unfortunately, the best opportunities, the best valuations come in times of fear. And times of fear where nobody wants it, when everybody's talking negative about that stock, those are normally the best times to go and make your money on it. You look at Hims and Hers, when Hims and Hers was at its best in 2021, everybody wanted to pile into the stock. A year later, when it was at its historic low valuations, and yet the financials improved and the stock was $3, $4, I had nobody commenting on my videos on Hims and Hers saying I want to own this stock. I had people commenting on my videos at $3, $4 on Hims and Hers calling it uninvestable, right? And now, everybody wants to own the stock. It's the best thing ever. And then as soon as we have a dip, don't own Hims and Hers. That's unfortunately investing, guys. Unfortunately, the investors that do the best in the stock market have to be very mentally strong. In the stock market, you have to be very mentally strong, because you have to get normally you get the best opportunities when nobody wants to own the stock. That's when normally the valuation gets to the, when there's maybe a little bit of concerns there, when people are talking negative about it, when the stock is sold off. Those are normally, unfortunately, the best opportunities to go make the money. It's so tricky to do, because sometimes as I did with Hims and Hers back then, is that I started buying the stock at $8, and I thought, okay, I'm buying at $8, and it went to $6, and it went to $4, then $3. I think the worst day it went to $2. You're sitting down 50% on a position, you're going, bloody, have I made a bloody mistake here with Hims and Hers? Like, I'm down, down that much. But as long as you stay longer term, concentrated, you stay at the financials, and you ignore the noise, you ignore the negativity, and you go, no, this company's going to do quite well. I'm looking at the revenue growth, it's still doing very well. I'm looking at the profit. At the time, they were a loss-making company, but they were starting to do the path to profitability. You could see, you start seeing the scales of efficiency kicking in, where the revenue growth keeps going up and it keeps dragging the profit with it. You're going, you know what, 2 or 3 years down the line, start running the numbers a little bit further down the line, ignoring a lot of these analysts that are trying to predict where the stock's going to be in 12 months time, you actually start running the numbers as a long-term investor and you go, yeah, 2025, 2026, I could actually see this stock doing really well, and you get the rewards for it. And then it's the same with so many, there's a lot of stocks like this at the moment in the stock market. You look at the likes of AMD, quarter by quarter, I'm staring at that one, I'm looking at, okay, the revenue growth's going up in the right direction, the profit's going up in the right direction. You know what the stock's doing? The stock's going down. It's going down. It was 24 forward times earnings. It's dropping to 22 forward times earnings. I think it even touched 21 forward times earnings actually yesterday. If the stock keeps going, 19 forward times earnings, 17 forward times earnings, and AMD, the revenue keeps going up, the profit keeps going up, I'm going to keep buying because the valuation's going lower and lower, but the financials are going that way, and eventually the share price will follow up. And all it takes sometimes is, with the likes of, as we saw with Hims and Hers, AMD, all you need is like the stock price to go up 10%, 20%, 30%. And I'll tell you what, right? If the share price goes up 20, 30%, you watch how quickly the narrative and the momentum will change around that stock. Very quickly, that advanced money destroyer, very quickly it'll go, oh, AMD's, catching up to Nvidia, or, you start seeing the headlines coming out like AMD as good as Nvidia and half the valuation, or AMD now competing with Nvidia. And the momentum, the media will all change around it just because the stock's gone up 20, 30%, and they'll eventually go, oh, look at the company, it's growing this much, the profit's growing this much, and the share price has gone up. And they're only talking about it so positively now because the share price has gone up. We've seen the financials for the last few quarters improving, and then just because the share price starts doing it, everyone starts talking positive about it. It reminds me of like PayPal. PayPal's the exact same thing. What happened, like literally, like over the last 2023 into 2024, started buying PayPal, everybody talking about negative, it's a dead company, or nobody wants to own it, they're so far behind, or Alex Chris, is he going to do anything? Started buying the stock, went lower, everyone started talking, so, keep talking negative about it, $70, $60, $50, kept buying the stock. The financials still keep doing very well, Alex Chris does a good job, and then it always starts seeing is the share price going up and up and up and up, and then eventually goes, oh, look, Alex Chris is doing the CEO. Oh, there's still good growth in this PayPal business. And even though it's the same company from where it was at $50 to where it's now at $70, just because the share price goes up, you'd be amazed how people then all of a sudden want to buy PayPal. People start talking positive about PayPal. And then, PayPal went up to $90, $100, and everyone's still talking positive about it. And then I'm looking at that going, you're all just talking positive about it because the share price is up. I then start seeing the financials start deteriorating. People aren't bothered about the financials deteriorating PayPal because the share price is going up. And at some point the share price is going to catch up with these financials because the financials are starting to deteriorate a little bit at the moment. And then eventually the share price drops massively off earnings, and then all of a sudden everyone's talking negative about PayPal again because people are going, oh yeah, there weren't good earnings, the share price is down. Well, the earnings have been bad for the last 2 quarters, but you're only saying the earnings are bad now because the share price has gone down. And that's what I'd say 80% of the market, all they do is chasing the share prices. They're going, oh, that share price is up because it's the best thing since sliced bread. Share price goes down, well, you don't want to touch that stock. And the thing is that half the time when the stock's down at them sort of levels, those are the best opportunities where you want to go buy it. So anyway, I apologise because it's not really much stock talk today. It's just around so many subjects, I guess, and I would say mentality was the big subject today, like how people react so differently to share price movements, but also just as well as just mentality and share price movements. I also wanted to talk about the disconnect between analyst targets, why it's important to run your financials, why it's important to have your own conviction in the stocks for when the stock goes down, noise that's on social media, why you need to ignore the noise on social media quite often and you focus on your investments. I saw B&M the other day. B&M dropped 10% when the CEO noise kind of came out, and I saw the panic, the fear, the noise around it, and I was like, that's still a pretty good valuation here, and keep buying it. And I think B&M will be another one that does quite well, and we'll see if the ignoring the noise worked out for that one. So anyway, that's enough for today because it's quite a long video and I don't want to ramble on too much. But thanks for watching, guys. See you in a bit.